billion euros of market capitalization, so it has huge market cap. It's trading on a 20% discount to the sum of its parts. In order to stay in business, the CEO of the company is now forced to restructure it. However, even Financial Times is very skeptical. It writes that this isn't going to end well, this isn't going to do much, and instead, it will just become death by 1,000 paper cuts. Attractive though that might be, referring to the CEO's restructuring attempts, it would not solve BASF's underlying strategic problems. Its chemicals division, which turns petroleum products into the base and intermediate molecules needed to make everything else, is seriously challenged. A big chunk of its production is in Europe, where energy prices are a multiple of those of its US and Asian competitors. Now, this brings us to the fact that European producers, as we just discussed, are simply unable to compete with those from China and other parts of the world, but mainly from China, where access to cost-effective resources, to industrial infrastructure that is very modern, to skilled labor at a price point that doesn't cost an arm and a leg, as well as government regulations do not prevent them from producing and being able to get a good profit margin on their goods. All of those things actually are attributes of why European manufacturing is literally on its deathbed. In Europe, the days of Germany's manufacturing superpower are long gone. A research expert at the Swedish Energy Agency recently commented to Financial Times, "We in Europe need to get our stuff together if we want to have a chance to be competitive going forward. Batteries are such a central technology, you can't opt out of it. You can't have a transport industry, a defense industry in the future without having secure sources of batteries." So, tough times ahead for Europe. At the rate that we're going with constant